I came back in 2005 and started investing in the consumption story in India. And the logic was we'd seen other markets kind of get organized. Technology was going to come in. Technology was going to provide a platform by which you could facilitate distribution in a unique way. And so suddenly you could reach customers with a consistent message. And that was what was going to change the world. And, you know, if you looked at India's retail footprint overall, it was in 2005 probably about 4% organized. Today we've come to about 12% organized, but half of that organization has taken place online, and the offline organization has moved from 4 to 6%. Now, everyone bought into this dream, and I think that for too long money was free, and as money was free, we burnt a ton of it, and all in the wrong places. And you could argue, okay, that's like one very expensive MBA lesson, but it was like billions of dollars. I think what we've come to learn, let's say in a business like Bombay Share Company, I'll give that as an example, there's a limit to how much we can acquire customers online. And as a result, incrementally, we're burning money. And that just doesn't work. But what we saw was our stores turn profitable within 1 to 2 months, pay back within 9 months, don't hold inventory, so you're not dealing with this negative situation of dumping stuff into landfills or discounting to sell it down. And so let's say that business model has worked out well for us, but the challenge has been the dream of the online distribution of it is still far away because there are too many people spending too much money trying to acquire in that channel. Now, but we keep the faith in all of this because I would say one of the taglines for the economy that we look at is it's fragmented. So India is sort of fragmented in every manner and shape and form, whether it's languages, foods, customs, and that means that we've not been able to develop brands. And now the online channels and the organization offline as well is going to enable that. But I'm not smart enough to figure out which brand will win. So what we're looking at specifically is saying, do you have a structural advantage in how your business operates? So in the case of Bombay Share Company, it's no inventory, custom. So I can say that my balance sheet looks a little bit different, my cash flows will look a little bit different, but I have no idea whether or not people will stomach the idea of waiting for 3 to 4 days to get a shirt, and how many people will do that. So that's the bet we're taking there. But if you ask me to pick a brand to bet on going forward, I have a harder time knowing whether it'll sustain over the years, because I think that takes determined capital to continue to work at it. And so that's the dilemma. But I honestly believe that we're going to see the emergence of brands because you just don't have enough market share at the top in any category with any brand. And so whether that's fashion or beauty or jewelry or anything, we have the opportunity to build these brands today. Tech will play a role, but I don't think it's going to be just tech. And I think that that's why you have to get people from the industry. There's such a cool panel. I mean, I'm just listening to the views. I mean, hearing that side of the equation is what's really important, because this is a creative meets data business. And you pointed that out. And I think that that's the important thing as an investor, is to say, listen, I got to give enough rope to the creative because I have no idea what's going to work. But the creative has to understand that the patience on the data side is limited. And we have timelines and that. So that dance, I guess, is very exciting to be a part of.